I know there are a million things to watch in the markets right now, but today I want to highlight just one. It could be one of the most important factors moving gold, and it's something that often gets overlooked by investors. So what is it? Well, one word: interest rates. And to be more specific, I'm talking about rising interest rates. So people buy them, which drives up their prices. At the same time, though, gold doesn't pay any interest. Gold looks much more appealing because it pays a very attractive risk-adjusted return. People buy gold, which drives up its price. So basically, if you want to understand what's going on with the price of gold, you always have to keep a close eye on interest rates, especially US Fed policy. Well, essentially it comes down to one main economic indicator: inflation. You see, when inflation is high, the Fed usually raises interest rates to bring it down. And when inflation is low, they tend to lower interest rates to stimulate the economy. You can see that whenever the Fed has raised interest rates, the price of gold has fallen. And whenever they have lowered interest rates, the price of gold has risen. Their decisions on rates can move the price of gold very fast, sometimes hundreds of dollars per ounce in a single day. Meaning it hasn't come down as fast as the Fed would like. If inflation stays high, the Fed will likely continue to raise interest rates, which means that gold could keep falling. On the other hand, if inflation starts coming down quickly, the Fed may start cutting interest rates sooner than expected. That would be very bullish for gold. So it becomes relatively less attractive compared to these other assets. Now, of course, interest rates are not the only thing that you need to watch when it comes to gold. There are many other factors at play, such as global economic growth, geopolitical tensions, and even the weather. But interest rates are definitely one of the most important factors, especially in the short term. So what do people do? They sell gold, which drives down its price. The price of gold can be very volatile, especially in the short term. And there are also costs involved in storing and insuring gold. However, gold can still be a valuable addition to a well-diversified portfolio. Now, we all know that interest rates have a big influence on the price of a bond. Thank you for watching. As rates rise, bond prices fall, and vice versa. But here's a question for you. What do you think happens to the price of gold when interest rates rise? Do they have an effect? Well, the answer is yes. The price of gold was around $1,100 per ounce. Then suddenly in March, the Fed raised interest rates for the first time in nearly a decade. And guess what happened next? The price of gold fell nearly $100 per ounce almost immediately. You see, when interest rates rise, other assets such as bonds start paying more. They're more attractive to investors. In March, when the Fed signaled that they would start reducing their balance sheet and potentially raise interest rates faster than expected, the price of gold sold off very sharply. It fell nearly $300 per ounce in just a few weeks. On the other hand, when the Fed makes more accommodative policy moves, like lowering interest rates or buying bonds, the price of gold often goes up. For example, here's how the price of gold reacted to the latest CPI report. When the Fed signaled that they would slow down rate hikes because inflation came in lower than expected, the price of gold went up. On the other hand, when interest rates are low or even falling, for example, let us take a look at this chart from 2016. You can see that in the beginning of the year, or take a look at this chart from earlier this year. Now, you might be wondering, why does the Fed make these types of policy moves in the first place? Why do interest rates keep changing? For example, right now, the Fed is raising interest rates because inflation has been very sticky. So if you want to stay up to date on the latest inflation data and the Fed's policy decisions, for example, here's how the price of gold has reacted to various Fed policy decisions over the past few years. Now, obviously, investing in gold does not come without risks. If you enjoyed this video, please hit the like button.